Double entry, double means two. So it's called a dual effect. Dual effect means if you do anything on the left hand side, you have to counterbalance it on the right hand side to balance the books. Now remember I said the accounting equation is assets is capital plus liabilities. Now this is your left hand side, forget debit and credit at the moment, and that's your right hand side. Don't forget this only applies to the balance sheet and nothing else. Okay, so we're going to look at how double entry works in the balance sheet. Now before we go into detail, let's look at the concept in our mind, okay? So let's look at example 1 at the bottom there. Can you all see the example? Right. Now I'm going to start it with a smaller company like a sole trader, but the principle for double entry is the same for whether you're doing a sole trader, a partnership, a limited company or a non-profit making company or whatever. The principles are the same. Now to do that, let's look at a T account. We call this the T account. So every time you prepare an account, you do a little T, like to do your journals, and then you have the name of the account, so whatever the name is. Okay, I'll look at that in detail in a minute. That's your left hand side, and that's your right hand side. Remember I said assets are always on this side, capital and liabilities will be on the other side of the equation. Okay? Now, let's read the question. It says, suppose that Percy starts a business as a grocer by investing 10,000 of his life saving into a business bank account. Okay, who's Percy? He's the owner of the business, yes or no? Now, when the owner of the business puts money in the business, what do you call that? I've already mentioned it earlier. You said, gave me the answer. Capital, yes or no? Right? So, how much capital is he starting with? 10,000, yes or no? So, capital is going to go here or here? Left or right? Right hand side. So, you say capital. How much? 10,000. And once the capital is in the business, where is he putting the money? What's he opening? A business bank account, yes or no? Is it bank? Yeah, bank account. Bank is what to the business? Asset, liability or capital? Asset. Remember, if you look at your current assets, go and have a look at the chart we did earlier, you got bank in there, yes or no? So you'll say here, bank, 10,000, and it balances. It must balance. Okay so far? Yeah? Right. Any questions? No. Let's look at example 2. We've done the first part of example 2, yes or no? Percy is investing 10,000 in the business bank account. Are you happy? Page 19. The second part. It says Percy buys £2,000 worth of non-current assets for the business, paying by check. Okay. What is he buying? A non-current asset. What's a non-current asset? Give me an example. Could be anything. A computer. What else? A table. What else? What else? Some sort of furniture, whatever, yes or no? So he's buying a non-current asset, yes or no? Now, when he buys the non-current assets, for how much? 2,000. Is he paying, how is he paying for it? By check, yes or no? Now, whenever you see check, that will affect your bank account. Whenever you see cash, it affects the cash account. Now, some companies don't keep cash accounts. Especially companies like yours, I don't think you'll have a cash account. Grocers and small businesses will have cash account, okay? Because I don't think you guys will have money lying around in the offices and that. So cash will go in a cash account, bank will go in the bank account. But at the end of the day, it's all money anyway. Now, when he buys this non-current assets paying by check, where will the money come from? Here or here? From the bank, yes or no? What will happen to the bank account? Up or down? It'll go down, yes or no? By how much? 2,000. So how much, I'm just carrying on here. So how much will be left in the bank? 8,000. Is everyone clear why? Yes? Right. Is the capital going to change? Yes or no? Is the capital going to change? No. Can we write a sentence now? I'm going to dictate a sentence. Can we write that down? Capital never changes in a business, except capital never changes in a business except the owner introduces more cash into the business, except when the owner introduces more cash into the business, or when the business repays the owner, or when the business repays the owner his or hers original cash, or if the business repays the owner his or hers original cash or investment. Okay, the only time capital will change is if I put more capital in the business, or now there is enough money in there, I'll say to the owner, here's some of it back. So that's the only time capital will change. Are we clear on that? Okay, so far I've got 8,000 on this side and 10,000 on this side. It's not balancing. Now, for that 2,000, what did I get in return? An asset. So it's going to go on this side, yes or no? And how much was that asset worth? Non-current asset. 2,000, isn't it? So that makes it 10,000. And how much is my capital? 10,000. So 10,000 balances. Happy? Not hard. It'll get harder later. I'm just looking at the concept at the moment. We'll look at how it all works in a minute. Right, let's look at the third entry. C. Percy buys £500 worth of inventory for the business and agrees to pay the supplier in 1 month's time. Okay? So he's buying something for the business, which is his inventory, which is his stock, but he's not paying for the stock straight away. He'll pay for it when? Later on. Are we clear? Okay. Is the capital going to change? No. So capital not changing. Is the bank going to change?
No.
Bank is not changing. Is the non-current asset going to change? No, that's not changing. Whatever he bought will stay. So what did he buy? Stock. Stock is what? Asset, capital or liability? Asset. So you'll put it on the asset side. How much did he buy? £500 worth. Fine. So this comes to 10,500, this comes to 10,000. It's not balancing. Now, in exchange for that 500 which he got stock, he owes that money to someone else, isn't he? He hasn't paid for it. What do we call that? Payables. And payable is this or that? It's a liability. Is it long term or short term? Short term. So it'll go under the heading of current liabilities 500. So 10,500, 10,500 balances. Must balance all the time.